Hello friends, how are you? In this video I will tell you how health insurance works. In the United States, health insurance is tricky to navigate. It's a business with a number of regional and national competitors whose coverage, pricing and availability vary from state to state and even by country. About half of the US population has health insurance coverage as an employment benefit, with premiums partially covered by the employer. The cost to the employer is tax deductible to the buyer, and the benefits to the employee are tax free with certain exceptions for us corporation employees. Self-employed people, freelancers and gig workers can buy insurance directly on their own. The Affordable Care of Act of 2010, commonly called Obamacare, mandated the creation of national databases healthcare.gov, which allows individuals to search for standard plans from private insurance that are available where they live. The cost of the coverage are subsidized for taxpayers whose incomes are between 100% and 400% of the federal poverty threshold. Fact fast. Some states created their own versions of healthcare.gov that are told to their residents. People over the age of 65 and those with disabilities and stage renal disease of ALS qualify to receive federally subsidized care through Medicare, while families whose incomes are near the poverty level are eligible for subsidized Medicaid coverage. Health insurance can be tricky to navigate. In the US, managed care insurance plan requires policyholders to get their care from a network of designated healthcare providers. If patients seek care outside the network, they must pay a higher percentage of the cost. The insurer may even refuse payment outright for services obtained out of network. Many managed care plans, for example, health maintenance organizations, HMOs, and point of service plans, require patients to choose a primary care physician who observes the patient's care, make recommendation about treatment, and provides referrals for medical specialists. Preferred provider organizations, PPOs, by contract don't require referrals but to set lower rates for using in-network practitioners and services. Insurance companies may deny coverage for certain services that were obtained without personalization. They may refuse payments for name brand drugs if a generic version of a comparable medication is available at a lower cost. Check your insurance company rules before you buy their insurance. What are copays, deductibilities, and consigliere? Most health insurance plans require their customers to pick up some of the cost of their coverage in various ways. The deductible is the amount you pay out of pocket every year before the insurer begins to meet the cost. This is now capped by federal law. Copays are set fees that subscribers must pay for specific services such as doctor visits and prescription drugs even after the deductible is met. Consequence is the percentage of healthcare costs that the insured must pay even after they have met the deductible, but only until they reach the out of pocket maximum for the year. Insurance plans with higher out of pocket costs generally have smaller monthly premiums. When shopping for plans, wait for the benefits of lower monthly payments against the potential risk of large out of pocket expenses in the case of major illness or accident.